stocks selling off as investors wonder if September could be worse than August. But could there be a silver lining for the most innovative companies? I'm Emily Chang, and this is Bloomberg West. Coming up, will the market volatility cause a liquidity crisis in private tech? Plus, a judge orders a lawsuit against Uber to treat drivers as employees can proceed as a class action. Plaintiffs want mileage compensated and benefits. And Apple may be planning to give Netflix a run for its money. All of that ahead right here on Bloomberg West. First, though, to our lead. Stocks around the globe continuing to tumble. Investors finding more reason to be worried about China. I want to get straight to our Matt Miller in New York. So, Matt, break it down for us today. Obviously, the Dow, S&P, the NASDAQ all ending down, and tech not having a good day either. Yeah, no, I mean, this just kind of proves the kind of leverage that China has over global equity markets. All they have to do is release a bad economic number or devalue their currency by a couple of percentage points, and you have massive, massive turmoil. I mean, the Dow Jones Industrial Average was down almost 500 points at the end of the day. The first day of September after an August that was the worst August in 17 years for the Dow. The S&P 500 had its worst month overall in 4 years in August. And we kick off September with a drop of 3.8%. It was a very bad day for energy stocks. It was a very bad day for financials. In fact, there were only 3 gainers on the S&P 500. Cablevision was up today. American Airlines was up today because oil got so crushed so hard. And Sigma Aldrich, the third gainer, is only at 139.44 because it's going to get bought for 140 in cash, and that's a done deal. So it might as well not even be in the S&P 500. You had huge losers in tech as well. I mean, Netflix was one of the biggest losers of the day on concern that Apple is going to eat its lunch making its own content. Back to you. Netflix, as you say, having a particularly bad day, down 8%. Apple still, though, down 4.5%. I want to bring in Cathie Wood, CEO of ARK Invest. And Cathie, you're saying corrections like we're seeing right now, this is actually the best time to invest in disruptive technologies? What do you mean?
Absolutely. During times of corrections, when the pressure's on, when the markets are unsettled, the economy's unsettled, people are fearful, CEOs and CFOs start thinking about cutting costs, increasing productivity, new products, new services, and it plays right into the hands of disruptive innovation.
So, Matt, would you espouse such a rosy-eyed view? No, I mean, look, Netflix has its issues. Bank of America raised the price tag on Netflix today to $133. But the problem is if Apple's making deals with TV execs and movie execs and they're going to start creating their own content, I'm not going to say it's going to be necessarily better than House of Cards, but it's at least some more competition there. And they've already got to deal with catastrophe over at Amazon. So a lot of companies are getting in on this game, and a lot of people are walking in front of my camera. And Matt, you know, I don't want to listen to you either. Let's get back to Cathie. Cathie, you think China's hard landing has already happened. Why are you so optimistic?
Well, if you look at commodity prices, it's no secret that the super cycle is over. They peaked in 2011, and they've been cut in half. And this is really all because of China. This is not a surprise. If you look at electricity and rail car loadings and so forth, the hard landing has taken place. And now they have much more room to ease than almost any other country in the world. Their short-term rates are 4.6. They've cut them 5 times. They'll continue cutting, and we think they'll get this right. Look, I think, Matt, well, listen, go ahead. They're in a situation where their currency, we hear, may be overvalued by 20 to 30%, depending on who you're listening to on the street. Interest rates are way too high. And most of all, they've got to stamp out corruption, which they kind of did theatrically, but they definitely didn't do for real. So doing those 3 things, even alone at any time, would be difficult. But doing them all at once is going to be incredibly difficult. And the kind of turmoil that that's going to put the market through, investors tell us, analysts tell us, is going to be really hard to deal with. Not the kind of thing that you bounce back from a 10% correction.
All right, Matt, I'm going to let you go chase down that person who ran in front of the camera. Matt Miller, thanks so much. Cathie, we're going to come back to you in a moment. But now I want to talk a little bit about the private markets and how startups are facing in the face of all this volatility. One company in particular, Mattermark, collects and monitors the private market. This is an area that's been notoriously hard to track. So are we seeing a shift in investor sentiment? Is cash starting to dry up? For more, I want to bring in Mattermark CEO Danielle Morrill here with me in the studio. And it's been really interesting, Danielle, to watch the growth of your company and see the data that you guys are putting out. Is a liquidity crunch coming for startups?
Well, it's hard to predict, but right now, based on what we're seeing, there's definitely a lagging effect. So actually, we're seeing the highest weeks of startup funding, so week by week by week, still over $1 billion each week getting put into the market. So what's happened last week and this week, we don't really seem to see that playing out. That being said, it's been very low activity this week, and we're hearing from investors who are our customers that a lot of people are in wait-and-see mode.
So, how big a cash crunch are we talking about?
Well, we're talking about over $1 billion every week going to startups. So we're probably going to see this play out in the barbell effect. The big companies stop getting these 100 million plus rounds, and the Series A companies, maybe the top of the funnel gets a little bit smaller. So we could be talking about hundreds of millions of dollars every week not getting invested.
Now, on the one hand, we're hearing a lot of investors like Bill Gurley warning to start prioritizing profits over growth. Yesterday, I spoke to the CEO of Workday, Anil Bhusri, who said, yes, we are in a bubble in private tech, and VCs are going to get hit when this all plays out. On the other hand, I just spoke with Marc Andreessen, who is a lot more optimistic. I mean, he's not completely, seeing through these rosy-eyed glasses, but, he's a lot less dire about what's coming. Take a listen to what Marc Andreessen told me.
I think situation normal. These are startups. Some of them are going to work really well. Some of them are going to not work at all. In some environments, it's easier to raise money. It makes sense to prepare for environments in which it's not as easy to raise money. To me, that doesn't, though, translate into a call for everybody to panic.
So, it's just there's not that same sense of urgency. He says no need for everyone to panic. What do you think of what he's saying?
I think a lot of things kill startups. Aside from liquidity crunches, right? Just bad decisions, wrong market, wrong hires, wrong team, can't raise more money because you don't hit the milestone. So I think what he's really saying is, really, if we're panicking all the time. It's always hard, and this is just one of those other factors that we can't control that we now have to consider.
And we've actually got a few charts that you helped us build with the data that you compiled showing private versus public capital. Explain what we're seeing here.
So we're definitely seeing that private capital deployed quarter by quarter has been growing along with the overall market. So people who are bullish on the market are also bullish on putting more money into startups. We're also seeing funds raise a lot more. So there's just a lot more capital to go around. And with interest rates so low, this is a good place to chase yields.
By your count, how many unicorns are there? Something like over 100?
Over 100 now. That's not entirely clear.
So how many of these unicorns survive?
Well, the question I would ask is how many of them were going to survive anyway? So, maybe a third of them survive to getting to IPO, a third of them get bought out, and a third of them die. That's probably roughly the outcome.
So a third of the unicorns will survive?
Maybe not even that many.
So what determines whether or not they make it?
Ultimately, I think if you look at historical IPOs, they have to be trending towards profitability. That's really, the market doesn't need to see massive profits. It wants to see growth, but it does want to see that you have control. So I think it's going to come down to which companies are able to operate in any environment and continue to get revenue.
So, I want to take a slight turn to Uber. As I mentioned ahead of the show, Uber facing now a class action lawsuit from drivers in California. This is another twist in the ongoing tussle between them. We did get a statement from Uber saying, while we are not surprised by this court's ruling, we are pleased that it has decided to certify only a tiny fraction of the class that the plaintiffs were seeking. Indeed, one of the three named plaintiffs will not qualify. That said, will most likely appeal the decision as partners use Uber on their own terms, and there really is no typical driver, the key question at issue. How big a setback is this?
It's probably not a huge setback for them at this point. I mean, they're a multi-billion-dollar company with probably a lot of other harder problems to overcome than legal issues. It's probably not great PR for them, especially in a time when the markets are questioning if they should be going public or not. But I think ultimately they're growing so fast right now that it's probably just one of a long list of things they need to deal with as they mature.
So when it comes to a quote-unquote unicorn like Uber, how does the shakeout play out for Uber, for companies that are well-funded?
I think the big question is, at some point, if you keep needing capital, is there another investor who's going to write you a bigger check or a check at a higher valuation so that your previous investors feel like they got a markup? At some point, that stops happening, and that's usually when companies have to go public. That's the last investor, and that's the investor that's willing to pay the full market price. So how it plays out is at some point, you just reach the ceiling, and some people wonder if maybe Uber's there.
All right, Danielle Morrill, CEO of Mattermark, thanks so much for joining us. We'll continue to follow all the stuff that you guys have been putting out. And Cathie Wood of ARK Investment, thank you as well, Cathie, for stopping by. Now, still ahead, Apple's Hollywood plans. We'll tell you why the iPhone maker now wants to produce TV shows next. Here we go. Now, to Apple's plans for original programming. According to a person with knowledge of the situation, Hollywood executives have held talks with Apple about producing exclusive shows. Meantime, Apple is expected to unveil a new version of its Apple TV set-top box at an event next week. So, how much of a threat will this be to existing online video services like Netflix and Hulu? Here with me to discuss, Bob O'Donnell, founder of TECHnalysis Research. Okay, so what's really going on here?
Well, you know, everybody is now getting into the game of doing their own original content, because the concern is...
But why Apple?
Well, that is a big question, right? I mean, to me, there's more risks than rewards here, right? You think of Apple, what kind of content will they do? Will they do family-friendly content? Will they do racier content? Will that impact how people view it, right? It's a different company than the other companies who've got into the content creation business, and there's more associated with the brand. And so that's a big question mark. I guess the concern is they need to have some sort of original content so that when they offer a package of content, not only will they be able to deliver the same thing that everybody else does, they'll have a few unique things.
And you're saying when they offer a package of content, not if.
Well, I think they're going to. It's clear that the trends are showing not only are they going to do the new TV box, but they're doing that in preparation for TV service, right? Everybody's been talking forever about how do we do an a la carte video service where I don't get stuck with these cable bundles. I want to be able to pick and choose, and they've been looking for Apple to provide the unique, very friendly way of doing that. That's been the big thing that's hung over Apple for a very long time. So I think it's clear that they are going to do that, but the question is, how do they make it really unique and different? And clearly they're looking at original content.
I mean, it's a hit-driven business. I mean, is it any more complicated than that?
Well, exactly, and the question is, just because they're Apple doesn't mean they're going to, as you know, in the last package you guys talked about, does that mean they're going to be better at doing content than anybody else? I mean, all of these companies are having a hard time. Yes, they're going to hire, Hollywood producers and movie people who have experience.
Or maybe buy a studio.
But still, there's no guarantee in that business. I mean, it's a very, very difficult, taste-driven business that is very hard for people to continue to innovate on and make a lot of money.
We're seeing Netflix doubling down here. They just ended their contract with Netflix. They're going to be focusing even more on original content. Amazon as well. How does this disrupt the broader pay TV industry, potentially?
I think the bigger issue isn't going to be about content. It's going to be about business models. And whoever can deliver the best, easiest business model that lets people get access to the content they want on the devices they want ultimately wins. Now, and that the content that they have is a nice thing to have, but really fundamentally it's going to be about the business model, and that's potentially where Apple has an upper hand. If they can figure out a clever business model that lets people get access to the stuff they want on all their different devices, then I think there's an opportunity. But let's be honest, Netflix is working on that too, so is Amazon, so a lot of other folks.
All right, Bob O'Donnell of TECHnalysis, you are sticking with us.
I am indeed.
Coming up, we are focusing this week on emerging leaders in virtual and augmented reality. Today, we turn our attention to Blipper, a unicorn that's harnessed the power of augmented reality as a tool for mobile advertising and visual search.
Blipper is actually an app which uses your phone's camera, and through which when you look at things, those things come to life. I think something at the core of Blipper We want to make the physical world limitless, and we want to make creativity dimensionless. And what we mean by that, at the heart of it, it's a very creative platform. And we call it ads, but ultimately all good ad is about amazing storytelling. And you're able to tell a much more entrenched and much more engaging story via Blipper, because it's not just one-dimensional, it's like three-dimensional. That is the reason the engagement levels have been so high. If you blip a dog, it'll tell you the species of the dog you're looking at, where's the nearest vet, what kind of a nutrition this dog needs, all the trivia about the dog, where could you buy the nearest dog food, locally to a retailer or online, coupons associated with all necessary info, nearest dog walker agency, blah, 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 it goes on. The search is it's a simplistic way to explain it, but this behavior is not search. This is more about discovery, and it's more about pointing. There is one behavior that, hey, I'm interested in a blue shirt, and you can type and you get 10 results and you choose. The second behavior is, I'm interested in this blue shirt. I think the opportunity is really big. It'll be a shame to sell this business and lose out on that opportunity and the opportunity of the journey to take it all the way.
Blipper has an estimated valuation of $1.5 billion, and tomorrow our series continues. We will show you how virtual reality is starting to transform traditional workouts. Now up next, YouTube's plan to dethrone Twitch. I'll be joined by Google's head of games next. And it is time now for the Daily Bite, one number that tells a whole lot. And today's number is 225,000. That's how many Apple iPhone accounts have been breached by hackers, according to the security company Palo Alto Networks. The hack only targets jailbroken phones and is being used to steal personal information and make unauthorized App Store purchases. It's said to be the largest known Apple account theft caused by malware. Now, video game live streaming, that's YouTube's latest venture, a dedicated app and website focusing exclusively on gaming content. It could mean big money for Google's video site. Its biggest competitor, though, is Amazon-owned Twitch, and Twitch hasn't been able to gain a foothold in mobile gaming. Still with me here in the studio, Bob O'Donnell, founder of TECHnalysis, and joining me from LA, Ryan Wyatt, head of gaming content from YouTube. Ryan, thank you so much for joining us. So first of all, why did YouTube decide to do this, and what's been the response so far?
Yeah, as we've grown bigger on YouTube, we've seen a lot of amazing communities kind of come up, and gaming is, more people are watching gaming on YouTube than anywhere else in the world, and we realized we needed to create not only a unique experience for our creators, but the community engaging in our video content. So that's kind of what inspired us to create YouTube Gaming.
Now, not everybody quite understands this concept of people watching other people play video games, including Jimmy Kimmel. Take a listen to Jimmy Kimmel. Okay, actually, we don't have that soundbite, but Ryan, I'm sure you've heard it. He was just sort of questioning, why would anyone want to do this? So why would they?
Yes.
How big is this market really?
Yeah, I look at you look at basketball, right? You can play basketball, but people enjoy watching it. And I think this is definitely a new movement, right? And I mean, we're seeing stars like PewDiePie on the cover of Variety that makes gaming content. So it is new, and it's something, that teens are also enjoying as well. So yeah, I think sometimes it can be difficult for people to understand. But again, it's a massive growing community and culture of people consuming it for the entertainment purposes. But yeah, Jimmy, he was funny.
So the big question I have is, obviously there's comparisons to Twitch. So what is going to make YouTube gaming different from Twitch?
Yeah, it's a great question. It was, if you look at kind of the ecosystem now, it's fragmented. There's VOD content in places, there's live content in places. So what we wanted to do is be the first ever one-stop shop that not only had live content and had a robust live platform, but we also wanted to take this great corpus of VOD gaming content we had and bring them together. So I think that's really what makes us unique to any other gaming platform out there.
But are you going to do additional things like original gaming shows or original kind of content that, you know, makes it somewhat different as well?
Yeah, you know, I think, you know, there's areas where, say, we did Video Game High School, and certainly looking in original content, looking into esports. You know, this is also a segment that's on the rise. There's great premium content that's being positioned in esports, which is the competition of basically people that play video games playing in million-dollar tournaments, filling out arenas all around the world. So there's opportunities to do different kind of content in this space, and we certainly want to continue to add to our already existing platform of gaming content.
Now, we actually do have that Jimmy Kimmel shot now, so let's take a quick listen.
Gaming, and I don't get that. To me, you know, watching another person play video games is like going to a restaurant and having someone eat your food for you.
All right, well, that's how Jimmy Kimmel feels about this. And by the way, it actually wasn't a popular clip. So apparently, Ryan, you know, somebody is on your side. But, you know, Twitch is in the pole position right now on the PlayStation 4 and the Xbox One. How do you displace Twitch on those platforms, or is your real target desktop and PC gaming?
Now, we want to focus on all types of gaming content, from mobile gaming content to console to PC. I mean, we already have all of that content that exists on the platform today, and it's really about how can you make a platform that, you know, increases discoverability and optimizes for finding that gaming content. Right now, you can go in and you can watch people playing mobile games, console games, and PC. So really, it's about just making sure you're building the products and the ecosystem to continue consuming that great content out there, and how can we better help creators get that content out, right? And these are our main focuses. So when you talk about, go ahead.
Well, I was going to ask about mobile gaming in particular, because that seems to be a particular opportunity for you.
Yeah, mobile gaming is huge. You know, as you know, there's a lot of mobile consumption of content on YouTube as a platform as a whole. Clearly, the mobile games market is an emerging market. It's growing incredibly fast. There's a lot of people taking advantage of this kind of growing market in gaming. So now we want to kind of, how do we get that content and people that want to watch people play this games and that content onto the platform? So yeah, we certainly are focused on mobile, not from just a games perspective and people playing it, but how do we make great devices and software so people can consume that content. And that was really also another idea behind YouTube gaming, is making it accessible.
All right, Ryan Wyatt running YouTube's gaming operation. Thank you so much for joining us there from LA. We'll be watching other people play video games.
Exactly.
Just for you. Thanks, Ryan. And thank you, Bob O'Donnell of TECHnalysis, for joining us throughout the show. Great to have you. And that does it for this edition of Bloomberg West today from San Francisco. We'll see you tomorrow.